Hello, welcome to this market strategy hub. In this video, I'm going to explain bear call spread strategy, which is a very safer option selling strategy. Many beginners sell naked calls, but they can be very risky because losses can be unlimited. So today, I'll show why bear call spread strategy is much safer, and I will demonstrate it in Opstra Strategy Builder. This is Opstra Strategy Builder. So, what is bear call spread? Bear call spread is used when market to stay below a certain level or slightly uh, bearish. So in this strategy, one sell call option and buy another call option at a higher strike. Both options have the same expiry. That is 17 March and 17 March. Buying the higher strike call limits limit the risks. So right now, I'll show you example. Right now, market is in 24,011. So in order to write this strategy, one is to uh, choose option strike price. So this option strike price 24,100 call. That is from uh, March 17, weekly expiry, one lots at a premium of 395, and buy 24,600 call at a premium of 160.8 rupees. Same strike, one lot each. So the probability of profit is right now is 61.95%, and max profit is 15,223. That is 23.70%. Max loss is here 17,277. That is negative 26.90%. So you can lose up to, a target will lose up to 26,000 only. Max loss is defined here, not indefinite. Max RR return ratio is 1:0.88. Break-even comes to 0 to 24,334. So break-even 0 to 24,334 means up to this level, there is a break-even. 24,334, that is a break-even. Break-even means if market stay below this level, it will make profit. But when it cross this level, 24,000, a seller will incur, his profit will start decreasing. But when it reach to this level, that is 24,334, the break-even, the real loss will incur. So the real will incur up to 26.90%. So total profit and loss right now is 0. Net credit is 15,223. See, estimate margin is or premium is 64,224 for this strategy alone. Like I have explained earlier, see, for a trader to profit, market should stay below this level, that is 24,100 level till expiry. But when it crosses this level, profit will start decreasing, and when it crosses this break even, the real loss will incur. That's the main logic here. So let's compare to naked option selling strategies. Let me take you to naked option selling strategies. Um, Let me delete this one. Okay, this is naked selling option strategies. See, market is right now 24,050, 24,057 spot price. This is it. And in naked option selling strategies, we choose 24,200 call strike price at a premium of 337.95%, 95, I mean, rupees. Same expiry, one lots. Write down the probability profit is 67.51%. Max profit is here 10.61%. Make loss here. Comparing to bear call spread, make loss is here undefined. But in bear call spread, make loss is defined. Means risk is risk is limited, but here risk is unlimited. Break even comes to 24,537. That is on this level. Break even. If market stay within this zone, you will make profit. But if market crosses this zone, trader will incur loss. The right total profit and loss is 1,339. That is 0.65%. Net credit is 21,906.75. Estimated margin of premium is 2,07,012. In this single one lot, if a trader sell option, naked option strategy, a trader will have to uh, require 2,07,012 rupees for this strategy, whereas in the course spread, it only uh, require only around 60 plus thousand, 62 or 67,000. So comparing to the course spread, this strategy is much worse. Like I have said, bear call spread. Let's check this again. See, in bear call spread, the margin is only 64,000, which is much lesser than the naked option selling strategy. So the main advantage of this bear call spread is limited risks. Risk is limited only up to 25%, and it's much safer than naked call option. Good strategy for this bear call spread strategy is good for beginners and less stress during sudden market moves. The only disadvantage of this bear call spread is profit is limited. Profit here is limited, so it is one of the safest options selling strategies for traders who are side bearish or expect the market to stay below a certain level. So This is it. This is the best strategy. If you found this video helpful, to hit like and subscribe button, and thank you for watching.